Hi, this is Steffy and welcome to the Financial Fox. Today on the show, I'm going to share a conversation I had with the CEO at Yellow Network, Louis Bellet. So why I have decided to share this? Because Yellow Network is a project addressing one of the key issues in DeFi, which is liquidity fragmentation. And they are offering a fully decentralized trading infrastructure that actually enable real-time cross-chain trading without the need for broker to bridge assets. So they are kind of reinventing the concept of market making and really enable a new way of crypto trading that is more efficient. So I don't want to make it too complicated because we are going to unpack that with Louis, but I thought that it was a very interesting topics and is really addressing one of the big issues that we see now in decentralized finance. So I thought, why not sharing it with my amazing viewers and tell them about this project, what he's doing, what he's building. They've got a testnet out there you can check out and also see what you think. So if you have got any comments, feel free to email that to me at steffy@financialfox.news, or you can add them in the comment section of the YouTube channel. Before we get into my conversation with Louis, if you're not subscribed to our YouTube channel, click the subscribe button now and follow us on social media to stay up to date with our news and interviews. Now, let's get straight into my conversation with Louis. Hi, Louis, how are you?
Hello, Steffi. I'm great, and you?
Yeah, it's great to have you on the show. So maybe to start with, I think it would be good if you could give just a short introduction of yourself and some background on Yellow Network.
Sure. So I'm Louis, the founder of Yellow Network, the foundation, and I'm a startup entrepreneur from career. So I've been building high-tech product for the last 20 years. And so passionate about blockchain and what's happening. Now this is Yellow is what I'm working on.
Okay, fantastic. So I wanted to kind of unpack how Yellow works and the idea behind it, because obviously liquidity fragmentation is a big problem in any market. It's not just the crypto market. It's kind of like generally. So how are you solving this project? How do you make DeFi scalable?
So I would say, myself, I started my career with high performance web applications, and things haven't really changed when it comes to high performance computing system. Wall Street have been working a lot on, making high frequency trading. So we can trade in the nanosecond scale, let's say microsecond scale. So we all do have a knowledge as computer scientists on how to go to the highest performance. And I can swear that I would not try with a blockchain. So a blockchain by design has amazing properties, but speed is not one of them. It is not scalable and it will never be. So, we may do some progress to improve the speed, but it's never going to be what we say horizontally scalable. Horizontally scalable is usually you add more servers and you get more performance. So for example, Google Scale, their system is scalable. So for example, for a blockchain like Ethereum or even layer 2, adding more servers is not going to make it faster. The bottleneck is the consensus. So these are great tools. And so how did we solve the performance issue? So number one, we're going off chain. So going off chain is not a new idea. I think, Bitcoin with Lightning Network introduced it. So we call this state channel. And so basically you take as a reference and initialize a state on chain, and then you can go off chain, do your business, and then go back to the chain to, let's say, adjudicate or resolve any, let's say, settlement or make the snapshot. The second inspiration was for me traditional finance. And the big question was like, how, let's say, Wall Street or traditional finance, security exchange and Forex and option trading scale to a global scale, to having the ability to buy a Google share, Google stocks from Japan under a microsecond, while the exchange, the Nasdaq, is in New York. And the answer is clearinghouse. And so clearinghouse have been the key component in traditional finance to scale. And they did a great job because you can trade almost 24/7. You can trade Forex in extremely low latency. And I would say Forex is one of the example of globally available and low latency type of trading into a massive scale. There is other things, like Visa transaction. The key is that you're not paying with your Visa card. You make a transaction, but you pay later. So the settlement between the transaction, or what we would call the trade, and the settlement happens much later. And so basically with Visa, the banks are settling with each other much later. So there is an impression of scale and speed, but I would say it's a kind of elegant architecture that already exists in finance since many years. So we take what works and bring it to crypto. Sometimes it's the other way around, but that's the core of Yellow Network. Yeah.
So it kind of leveraging on what actually are the benefits of the blockchain to make decentralized trading more efficient, if I'm right.
Absolutely. So I think we are trying to combine the best of both worlds. I see blockchain, when it comes to finance specifically, blockchain is an amazing accounting software. It works automatically. You don't need to have staff. You don't need to have audits. It's always up to date, always audited, and always true. And so when you look at the scale of global finance, you understand that this is a leap forward efficiency that is not there yet when it comes to finance. I think blockchain has to bring it. So you may have heard, many projects were thinking, let's put securities on blockchain. We will get all of these benefits. And so we're still not there yet. So blockchain has a lot to offer. And I think for us, Yellow is a firm specialized in market making. We've been doing this since 2013 for very large accounts, and we are a bit specialists of the logistics of these assets. So moving crypto from one exchange to another, and always making sure we are feeding liquidity to all marketplaces. And we knew from a very early stage that centralized exchange is not the right design, and decentralized exchange are not really decentralized. Then came in the problem of, multiple chain. So that's isolate the tokens in each of these blockchain, and that makes the context very complicated today when it comes to performance, solving liquidity issues. And this is why we came to this design. If we want to reach the financial market, let's say speed requirement, which today it's microsecond scale and high frequency trading, we're going to have to go off chain. And second, in order to, let's say, account all of these assets in those different blockchains, we're going to need a clearinghouse. And so Yellow Network is a protocol and a clearinghouse implemented in the smart contract on Ethereum network.
Okay, very interesting. Now, can you just explain me a little bit in more details how you can enable real-time cross-chain trading without the need for brokers to bridge those assets?
So I would say, one of the key optimization of finance was to avoid settle as late as possible. So when the economics was all around gold, moving gold across the Atlantic was a challenging task. So, you'd rather keep a ledger in England and in USA. It's easier to keep a ledger and keep the debt than moving gold across the Atlantic. And I think this principle applies to crypto. So don't try to really bridge your assets, keep them under custody at the right place. And only then, you have like a form of supply and demand or registry. So, you wanted this wrapped Bitcoin on Polygon, there, go get it on the right custodian. And I would say that's the big secret. Don't move the assets.
Okay, that's a very interesting point. And here is sign also with lots of thinking and also with some project that I've been involved as well. But there are questions about, first of all, security. So you mentioned about custody, right? How do you keep those assets secure? Second question is about who is going to be maintaining the ledgers? Who are actually the actors that we are talking about?
So the custodian, with all our experience, we understand that this is a duty, a responsibility that may even be regulated in some way, not necessarily in crypto, but it always has been, for example, for gold. So let's say you have jewelry and you want to choose a custodian, you're going to choose somebody that is reliable, that have experience in doing that have all of this camera system and so on. You know, banking has been managing private keys for a very long time. And what we call bank grade security is usually, you know, making sure that however they manage those private key, the private key is never ever revealed. So, you know, you have these hardware security modules that are like servers that are shipped in data centers, and the private key is stuck inside the hardware and never got out. So to simplify, we do have the knowledge on how to do proper custody through cryptographic assets. Even from many years, private key security has been existing for a while. Now there is, you know, new participants which are doing MPC and new things. It's still complicated when you are a new participant to secure assets. The old one didn't made it to the crypto market yet. So I would say keep your asset in the most reliable, trusted custodian of your choice, which can explain their security and where their security is not, you know, a single point of failure, for example, compromised employees or things like that. It's a very big topic, custody, and Yellow decided to be a non-custodial network. So we rely on custodian partners and we trust them for doing so. Personally, the kind of custody I use most of the time, I would call it, you know, smart contract custody. So I ask a smart contract or a program to keep those assets and have these multiple keys. The same, you know, like bridge and so on, you need to secure each of these keys. So at the end of the line, you always need a good custodian and a level of security. So I think, you know, that to not answer to make a short answer, Yellow Network knows it's a complicated topic, strives and push for regulated custody and for professional custodian. I think they have a place in the industry. And there is no magic solution between fulfilling regulations, insurance, and proper handling of private keys. So Yellow Network, I would say, is agnostic when it comes to this, and every participant may choose their level of custody. Yeah, think of, you know, there is these people doing cold wallet with manual process. So very often cold wallet would mean manual process, very tedious and complicated and expensive manual process. So it's very hard to unlock the funds, which means difficult to settle. And I think, you know, cold wallet are the best level of security we have today, multiple keys and complicated process with cool down periods and these kinds of things. It is possible with the Yellow Network. We don't have any opinion here. So your second question was,
about brokers. So how do we basically leave out brokers? We don't need brokers to bridge assets on Yellow Network. So how that is possible, or who are the user going to become broker themselves?
So in the Yellow Network vision of the ecosystem, we speak a lot about broker, but in the traditional finance of it, not, I would say, like in crypto. So a broker, in our definition, is a platform or a company providing you access to the markets. So for example, eToro, Robinhood, this exchange where you can buy stocks, these are licensed brokers. And very often, one of the keystone of regulation and security is that brokers are not custodian. So in order to have in traditional finance, a license to be a broker, you need to have a partnership with a licensed custodian, usually a bank. And so the bank is in charge of safekeeping the customer deposits. So this way, the malicious broker cannot just take the money and just leave with the customer deposits. So that's, I think, a very important aspect. And so we believe at Yellow that the current exchange are the equivalent of the traditional finance exchange, and they should not be broker. That's overreaching in their responsibility. So if you look at some platform like Binance, they are custodian, they are brokers, they do their own marketing, they're doing too much of, the responsibilities all at once. And then it's complicated to audit them. So yeah, that's, I think, a very important separation. So does the user is going to become a broker? No. In the Yellow network, we are looking for connecting fintech companies. So we are connecting custodian, future brokers, and behind it, we have a protocol, let's say called an ECN, where you can get all pricing of the market and a bit, like a map of liquidity. The broker can access the liquidity where it is. So for each of, let's say, the access, they're going to have to establish what we call a trading channel. And so to establish a trading channel is a link to a supplier or a prime broker in traditional finance. You'll have to deposit a collateral on chain. And so you will deposit, for example, 100,000 USDT on Ethereum network. And then two brokers or a prime broker and a broker can exchange in high speed off chain any type of asset. So they could be trading Shiba Inu, Solana, and from different blockchain while having all the collateral from the stable coin on chain. And so whenever one of the parties say, oh, seems the market price has moved, are you ready to provide me more collateral? Then they just agree on the correct collateral amount. And if the contract is broken, one of the party can access the collateral on chain. So it's very simple, and it works exactly like a clearinghouse is working. So the job of a clearinghouse is monitor the solvency of all members so they can keep on opening positions. And the clearinghouse second job, I would say, is to net out all positions. That means that at the end of the day, maybe you made 10 million trades, but at the end of the day, you just need to make one transaction to this other bank, and you're good to go for the next day.
Yeah. Also, another point that you mentioned is about multi-chain. So how do you manage you said that you're built on layer 1 Ethereum. So what are your thoughts on interoperability on multi-chain integration?
So the way I would say, solve the problem is that every broker can have one or multiple custodian. So usually you choose a custodian, they are specialized on a set of chain. So there is like BitGo specialized in securing Bitcoin. Then you'll have Fireblocks, for example. They have quite a few assets, but they don't have all of them. So if you want to be a crypto broker or an exchange, I would say, and support 150 currencies and network, you're going to need, let's say, a dozen custodian and maybe sometime in-house solutions. So already the firm is multi-chain itself. And that's all we do. In the end, Yellow is non-custodial. So we are just connecting this exchange to other members of the network. And then they all agree to share the collateral on a single chain that we chose to be Ethereum. We call our solution layer 3 solution because, Ethereum would be layer 1. Then you have layer 2s, which would be, these rollups. And then layer 3, because we are off-chain, but we still commit the state on Ethereum chain.
Okay. So how do you manage to build this ecosystem of partners?
So, yeah, that's a good question. So I would say we shop for, when we're doing our initial token sale, we shopped for specifically those partners. So we went and partnered with our custodian. So many of them bought our token at early stage. because they have skin in the game to integrate the network later on. Actually, we're doing most of the job when it comes to the integration. So that was the strategy right away. We also have a lot of exchange that join in early stage. The second aspect is that Yellow is born from a company which I also founded called Openware. And Openware has been building cryptocurrency exchange for the last 4 years. So we have quite extensive experience, and we have the software for building those exchange. And so we already have integrated the network here. And I would say finally, we are providing, let's say, white label, turnkey broker solution. So the main strategy is let's give brokers back their own job. Some of them actually went to school and have a license on how, to do their job diligently. So this is actually a job. So if you're going to see a doctor, you'd rather have somebody that, have a license. You'll feel safer, right? And so when you meet a broker, in the US, it's better that he's also regulated and licensed. He will be able to explain you the risk or provide you the information in a way that does not influence you and mislead you into making the wrong investments, right?
Yeah, it's very interesting. So it's kind of like working as a master aggregator with a specific strategy. So you are building an ecosystem that is aggregating different partners, but you have got your own strategy, you have got your own token, you selected your stakeholders, let's say in a very strategic way. I think was quite clever. So tell me a little bit about the token. What are the incentives the token holder can have?
So I think I prefer to make the parallel with Ethereum blockchain. So the utility of the Ethereum token is paying the gas fees. So basically you can access a global computing system. And so for us, it's pretty much the same. You can access the liquidity around the globe. So any participant, if he's going to be consuming liquidity, he needs to buy the Yellow token and he's going to pay his liquidity. So it's like, you have a new cell phone plan, you're going to consume data, then you need a provider and buy his minutes or gigabytes. And that's the same for us. So on the other side, if you are providing liquidity to the network, you are getting paid in Yellow token.
Yellow token, exactly. Okay, so that's quite clear. It's a very important. It basically give you access, give you leverage as well, give you the ability to trade in a better way. So now, question about AI, because everything that is happening with ChatGPT and now artificial intelligence can do anything. Is there anything that AI can bring to crypto trading that you think is quite interesting? And also, is Yellow Network thinking about any kind of AI integration?
Well, I'm passionate about technology and studying a lot the progress of AI recently. So I would love to integrate it. Unfortunately, I would say we need a few years from now to get there. Yeah. First of all, building a model in finance is rather a difficult task. You need to be sure of few things so you can teach the machine. And unfortunately, if we were able to make certain prediction, we would be very good traders and we would always win. So that's, I think, is kind of a problem of training an AI. I think, we can, at a very early stage when it comes to the clearinghouse, there is a concept of capital optimization. How much capital, which is everywhere in crypto, it's in farming, it's in bridge. We always provide incentive. Can you lock your tokens? And I will give you some more, etc. And so, for us in the Yellow network, there is as well this capital efficiency. So, for example, what is the trading volume you could do for how much stable coin you lock on the Ethereum chain? That would be risk management. So every traditional finance have constant risk management algorithm to look into I need more guarantee from you. When do I stop trading from you, etc. When I think I have counterparty risk. And I think AI is able to compute a massive amount of information and risk management are very fairly well-known rules and mathematics. So we cannot really make great bots with AI, but we can make probably great step forward in alerting system that your financial platform, your brokerage is going into too much risk, too much debt. So, for example, FTX maybe has had an imperfect risk management model here.
Yeah, I think you also mentioned, Paul, about counterparty risk, and that brings us to something that we kind of implied, but we didn't articulate it, is about transparency. And I guess that transparency is one of the things that you're trying to focus in on building Yellow Network.
Yes and no, I would say. So there is a big deal of transparency. For example, at the clearinghouse level, you register, you have a public address as I would say a broker ID. Then you can attach a KYB or a KYC to this address. But that are not rules we are enforcing on the network. So I would say if you are a prime broker, and let's imagine the prime broker is Coinbase because we have great integration. Coinbase can say, well, I decide you guys to have a KYB with this company specifically. And unless, you have KYB cryptographically signed, you can't open a business relationship with me on chain by, making this state channel, trade channel I mentioned. But in traditional finance, privacy is extremely important to banks because this is your bread and butter. If you're doing market making and high frequency trading, you don't want to reveal everything you are doing. And I think, this is something we also respect. I would say, if you did a great trading strategy, you may not want everyone to reverse engineer it. And that's why, state channel are so great because you check in on chain, then you go off chain and you have encrypted direct link to your provider. And so the details of the transaction are unknown. And so only what comes out as the result, at the end of the day, okay, this provider owes to Coinbase $1 million, but we don't know the trading strategy. So, transparency, I think, is very important, but I think, we are pro-regulation because I think we need to stop the clash between regulators and crypto. It doesn't work. I just believe that regulations are healthy and, it should not stop innovation, but it secure the consumer. I think we have to agree with it. Do you need to be as transparent as Bitcoin is to be regulated? No, you need to have the right tools. Not only fintech company, but private banks as well, participate to the economy and have a great deal of privacy.
Yeah, I think that's the point about privacy is always, when it comes to money, there is always, it's not just that, it's also about data. So tell me a little bit about the community, because now I get how you are bringing all the partners together and you are creating the ecosystem, but obviously you need a community of traders, right? What's your strategy in building this grassroots community? So
we went, I would say, through a rather risky strategy. So I'm sure you've seen that, in crypto, there is, it's a bit building your community from bottom to top. So you start with an airdrop and so you get very, crypto savvy teenager, which are very passionate, those early adopters. And then you need to build your way to I'm getting startup, which are integrating my platform. And then I'm getting more established institutions. Yeah. And so, we are building those layers. And so we, similarly to what Polkadot did by releasing earlier Kusama, which is the Canary network, a test network. For us, when dealing with finance, we were like, okay, great, we can test this on testnet. But it does not mean it's going to be bulletproof because how do you test a financial application with risk management where nobody cares about the value of Go Early token or fake stablecoin, So if there is nothing to lose, you can't really evaluate the risk. And so our Canary network is a scaled down version of the Yellow network. And actually the scale we've been aiming at is that where $1 is $1 on Yellow network, we scale it down to 1 cent on the Canary network. Additionally, so this network is already launched. We have the Canary token launched. In 2 weeks, I'm releasing the first pieces of code of the clearing system. State channel is already ongoing on GitHub since 2 or 3 years already. Lots of white paper, lots of research work here. And so how do we connect, to this airdrop community? So first we came up with the funny name. We wanted an animal to think about a bird, and that is yellow because of our company name. And we came up with duckies, the baby ducks that are yellow. So the test token is called duckies. And, to create the ambassador, because we are a rather large company and we have a lot of resources, developer resources, at Yellow, so more than 100 people. We develop an NFT game to engage our early adopters to become ambassador, evangelists, and get rewarded through their loyalty. So the game is about collecting Ducky's card. I'll be happy to send you the beta test. You can try it.
Please. We'd love to.
And so I would say we're trying to build some affection to these NFTs, and so you can breed them and make the super NFT by combining their traits.
That's pretty. It's funny because I did bought an egg. When Canaria on Polkadot, they launched, there were those eggs that then they open at some point. And, I was involved in,
I didn't know that. So
it was very interesting. So they had this Canaria, exactly like you said. And, there were eggs. They released limited edition, and then the eggs at some point open up, and then you have this beautiful bird coming out that was going to be part of the game. There was a complete ecosystem built around those magic birds. And,
I had no idea actually. So maybe not so original after all. I think, crypto and blockchain, since we are a young industry, it's also the opportunity to have fun while solving, real life challenges. And, many people say, why did you build this duckies thing? And I say, because we can, because we can and it's fun. And I think, one more thing about our Canary network is that meme coins are a big part of what crypto is. And they have their reason to be there, like they are part of this, gambling, casino thing. I mean, trading is not only pure finance, it's sometimes as well a luck factor. And so I think, it was interesting. So on the Yellow network, we are trading more serious assets. So, like these Solana, these top 100 coins. Whereas on the Canary network, we focus more on having all of the meme coins. So,
Interesting.
That's our test currencies. So you are testing, and it's good because they have high volatility. And so we can see if our risk management engine are bulletproof.
Yeah. Okay. Very interesting strategy. Okay, Louis, thank you so much for coming on the show. That was very exciting. Please share with me the link for the duckies. And we'd love to have you back when you have got more news, more release, so we can update our viewers.
I think a couple of months I'll be happy to make a demo or follow up. It was a pleasure.
Okay, so it was great. Thank you.